Now, the markets are hoping for a Goldilocks outcome for the economy. Although, take a look at shares of American Express off their session lows after the CEO said October billings were not as strong as Q3, but then said November was back in line. What do we make of it all? Let's ask Michael Cuggino. He's president and portfolio manager of the Permanent Portfolio family of funds. We love these data points from these conferences, Michael, because it just gives us as close to a real-time read as possible on the consumer. The story seems to be October was weak. Maybe November's a little better.
Yeah, good afternoon, Kelly. I think it underscores the importance of not relying on any one data point, but trying to get as many as you can and then make some broader, 35,000 foot calls based on the broader, number of data points. So, I mean, I'm not sure what to read into this. I think Steve in the last segment got it right with respect to the Fed. If things continue to trend the way they are, they will cut rates to sort of maintain a ballast with respect to the right cost of capital, given the economic environments. I don't think that's rocket science.
Yeah.
I don't think they're cutting as quickly as maybe the market perceived based on some of the other data points you put up there.
So why do you think, and is this the reason why Bitcoin and gold, what's going on with these asset classes?
Well, I think if the cost of capital comes down, the speculative trade goes up. The risk goes down in terms of financing a more speculative bet. So that makes some sense. There is a little bit of an alternative asset class component of Bitcoin. I don't consider Bitcoin a proxy for gold. I don't think there's enough trading history there, but that's a whole separate argument. But I can see why it's gone up. It was also beaten down, so maybe it's a revaluation situation. So there's a number of factors there. With respect to gold, I think I can make a more concrete case, and I would probably look at several factors. Number one, we've been on a strong dollar trade now going for the last decade. And at some point that's going to reversion to the mean, et cetera. That's bullish for gold. I would say the central banks around the world continue to be buyers, possibly to finance alternative currencies to the dollar, possibly to just shore up their own monetary situation. I would say the Fed is close to being done, if not already done. And with reports like today, firms up the argument that they probably are done. I would point to the fact that gold held up really well the last couple of years in one of the more volatile rate hike environments we've ever seen.
Yeah.
And if you go back to 2013 and the taper tantrum and how gold fell that year, 10 years ago, based on just what occurred during that period, you would have expected gold to fall off a cliff the last year and a half, and it has not.
Yeah, although I think just to mention there's...
And then lastly,
yeah,
the geopolitical issue out there.